And we're live. I'm David Pipe. I'm here with Rob Kent. Between the two of us, we like to sit down and go through and talk with local home buyers and home sellers about ways that they can, get the best outcome, find the house for them, and or buy that or sell their house for the most amount possible. So today, I thought we'd start it off by talking about first-time home buyer mistakes. So if you're looking to get into the home market, maybe you're a first timer and you're trying to make sure that you do this in a way that helps you to get the right house for you, we're going to try and give you a couple of tips that will help you to make sure that you don't get stuck either not finding the house for you or spending way more money either on the house or on other costs that you don't want to spend. As mentioned earlier, I'm David Pipe and I'm here with Rob Kent. Rob's a local realtor and I'm a local mortgage broker. So between the two of us, we can help you to answer some of these questions. Rob, why don't we start off with the buying side, and why don't we start off with some of the things that you see as a realtor? Tell us about some of the key mistakes. What's one big mistake that you go through when you see first-time home buyers out there, and maybe they just haven't, learned the ropes yet? What's something that you see happen often?
Yeah. So and one of these things I think is the misconception that they can't afford a home, and what they do is saving up for your home is a must, right? But maybe it's saving up a little too long. Maybe it's not doing the research into talking to a lender about their financing and finding out exactly like what it is that they could get approved for, rather than just just assuming that they can't afford. They spend 6 months, a year, maybe longer to save up. And then at that time, and especially in the market we're in right now, where homes are going up, the value of homes are going up like daily, right? So, and then finding out that you've just been priced out of that home that you probably could have afforded, 6 months ago, a year ago, but you've waited too long, and now you find out that you're going to be shopping for something a little less or a little less than what you had wanted or had your heart set on, right?
So it sounds like you're saying, that maybe they weren't really sure about their affordability, so they spent a
Yeah.
lot of time sort of sitting on the sidelines.
Yeah, sitting on the sidelines, looking online. Maybe they're not even working with a realtor, right? But it's when you have that first initial conversation with the person and they say, well, we're not ready. We're looking, right? That's famous last words.
Hmm.
When you go into a realtor or a retail shop and somebody says, can I help you? No, I'm just looking. I'm just browsing. I'm just looking, right? And that's
Right.
similar to what they are. And maybe they are serious about finding a home, but it's about asking for that help, especially when it's your first time going through the process, which is kind of what we're talking about right now, first time home buyers, right? So they haven't been through the process before, and even if you've been through the process like 15, 20 years ago, it's much different than what it was back then, and things happen so fast. Like it's just everything is happening so fast that you have to ask the questions, and you got to kind of be educated.
So would you say one of the ways that they could avoid or deal with this is maybe to get a team around them, to
Yeah.
reach out and talk to somebody who can give them that advice, connect with a realtor early in the process? Is that something that
Yeah.
you think could help them?
Yeah, talk to a realtor, or even talk to your bank, talk to a mortgage broker, talk to somebody. And then yeah, it's like starting to build that team, and then maybe the realtor can refer somebody, or maybe the mortgage broker or your bank can refer somebody to help you out with starting the process of looking at homes, and going out and showing homes and stuff.
What
So
does it cost for a first time home buyer to get connected with a realtor to help them go out and find that house? I mean, what should they expect this will cost them?
for the services, nothing,
Right, right.
right?
Because a lot of
Yeah.
folks don't know, right?
Right. Right. Yep. No, that's yeah, and maybe that's another misconception as well, right? Maybe they think it's going to cost something, but it doesn't. It's just your time, and it's their time. But this is part of our job, right, David? So we know that we're not getting paid for this part of our job, but this is part of our job, and this is it's building a trust, you could
Hmm.
say, right? This is the initial stages is building trust, building rapport with this person so that you can give them the best advice and the best information possible so that you can make the process that much smoother.
Yeah, I've had clients who call and they ask me that question about how much it costs, when you're working with a mortgage broker. And, of course I
Yeah.
tell them that it doesn't cost anything, but, they ask, well, like, what should I do? Like, should I, like I have an appointment set up with my bank. Should I keep the appointment? And I always tell people that, in the beginning stages, it comes down to finding somebody that you can work with that you can trust and
Yeah.
it's going to be able to give you information and answers that satisfy your question. So if you don't feel
Yeah.
like you're getting the answers, or if you don't feel like you have a good fit with that person, it could just be personality. Make sure
Yeah.
that you start early by getting people around you, get a team around you that can help you to answer some of those questions because, all the first timer mistakes that we're going to talk about today and all the other ones we're not going to talk about, you can prevent a lot of these by basically connecting with an expert who can help you to navigate those waters. Even if you're not sure, start early
Yeah.
because you may find that you hit it off with them and they can really help you to save a lot of time and pain and money, of
Yeah.
course.
Yeah.
That's a good one. Aside from that, Rob, what's another sort of like first time buyer mistake that you see happening a lot in the marketplace today, especially in today's market?
Um, Maybe expectations. Their expectations on what they can get, whether it's, their expectations are they want to buy a home that they think would cost 500,000 when in essence it would cost 700,000 or something, something like that. Maybe their expectations are a little bit high. Usually you got to, and especially in today's market where the prices are increasing dramatically, it's about, having that conversation with them about the expectations. Maybe they're looking for a 4 bedroom home. Well, maybe you might only be able to afford a 3 bedroom home. Maybe it's they want a detached home. Well, maybe you might only be able to afford, a semi-detached or a townhouse or a condo or something like that. And it's about having those conversations quickly so that they can understand what it is that they can afford. Because, I mean, obviously, you're not going to try and get them to buy something that they can't afford. You don't want to show them homes that they can't afford. It's not fair to them. It's not fair to the sellers, the other agent, and it's not fair to you, right? It's just kind of wasting everybody's time. So it's about, the expectation, setting the expectations early with these people that you're building trust with as well.
So yeah, and I think that makes a big difference in how happy that somebody would be with the process, right? So
Yeah.
if I'm a first time buyer, even if I'm not a first time buyer, the market is changing so fast. It's hard to know what it's like out there today. So if you're a first
Yeah.
timer and you're getting advice or you're getting feedback or help from maybe a family member or a friend on what they paid for their house 3 years ago or what you should look out for or what is the right first house for you, being really sure that you understand what the market looks like can help
Yeah.
you to sort of manage expectations. I mean, we all would love to move into our dream home, right away, right? We would all love
Yeah.
to, move into the perfect house for us, into our forever home right away. But, in today's market and really, in general, that may not be the best path. I mean, the definition of a starter home is changing, and maybe it's time for
Yeah.
people to look at, yeah, hey, how can I do this a little differently? How can I find a house that fits my budget, that I can be comfortable and live in, and still afford to, do some of the things I love to do on, outside the home, but
Yeah.
still something that I'm really happy with.
Yeah, exactly. That's exactly it. Yeah.
Yeah, those are great. Those are really great. To add to it, Rob, on the mortgage side, I think that a lot of these things are connected, but some first-time buyer mistakes often are not asking enough questions. So here's one: not asking enough questions about mortgage default insurance. So
Right.
a lot of
Yeah.
folks, they understand if I have less than 20% down, then I have to pay for the mortgage default insurance. Some of them are totally okay with that. Some are really desperately trying to save up to avoid it. And,
Mhm.
your situation may dictate if, you should, do that or not. Here's a really great example. Let's say you have the minimum of 5% down. That's the minimum that you need to buy a house to get a mortgage, and that can work for a lot of people. The minimum of 5% down. But
Yeah.
if did you know that if you could afford to go to say 10% down, that you can save a ton of costs on the mortgage insurance side because the rates go down as your down payment goes up. So it's not an all or nothing thing. And when you sit down with your mortgage professional or you sit down with your bank, if that's the route that you take, then they'll be able to help you to figure out, where's your money better spent, and that sort of leads into the question about, well, I have a credit card debt, but I also want to improve my down payment. What should I do? Right? But if you don't ask those questions, then you may not get the right outcome for you. So certainly
Yes.
asking about the CMHC, as they call it, or mortgage default insurance, super, super important. The next thing is knowing what my minimum down payment is. So
Yeah.
everyone realizes it's 5%. Now, did you know that, as your house price goes up, the minimum down payment also goes up? So,
Right.
for example, in olden days, it didn't matter because most people didn't buy a house that was, 700, 800, 900,000. But a lot of young folks today, even first timers, are buying a house for, say, 750,000. I mean, that was, I think, pretty close to the average house price in the city of Guelph recently. So
Yeah,
what I'm
it
saying
is.
is that, did you know that if you buy a house that costs more than 500,000, that it's actually not only just 5%, but it's 10% on the amount that's over 500K, which can, add up. If you buy a house for 750,000, then your down
Yeah.
payment is requirement is higher than at 500,000 because of that rate change. So certainly
Right.
asking about down payment, what's my minimum down payment, understanding it, and knowing the ways you can acquire it. So
Yeah.
gifts from family, pulling out of investments like RRSPs are also possible. Of course, savings, building up your savings over time. They're all ways to acquire a down payment. So, those are two really good examples. I find that if you ask the questions and plan ahead. I
Yeah.
mean, again, going
Yeah.
back to what you said earlier, Rob, which was, hey, let's start the conversation early so that maybe you have time to decide the right path for you. But start that conversation early. I have a lot of clients who, they're first time buyers. They're not sure which way they're going to go. They don't have all their down payment saved up yet, and that's
Right.
okay, right? So take the
Yep.
time to get yourself on the right path, because what happens if you, spend all this time saving up money or trying to save up, and then realize that maybe you have to switch directions a little bit with, your house plans. So I
Yeah.
think those are two
I
really
think
big
another
things.
thing too, another one that I just thought about is credit, right? A lot of people, not a lot of people, but some people think that they have bad credit and they're not going to
Mm-hmm,
be able to get a home, right?
mm-hmm, mm-hmm.
But it's about asking those questions again with their lender or mortgage broker who will shop around, and it's maybe it's a B or a C lender that might kind of look past the credit score, right? It's not having the sparkly credit score, that you do have options, right? And I think that's another misconception, is people don't think that they have that those options. Like, do you
Yeah.
see that a lot, David?
Yeah, we do. I tend to get folks with all different scores, anywhere from best of the best to
Yeah.
maybe you had a life event, maybe you had a job loss. I mean, we are in COVID times. There were a lot of people who changed jobs, and those
Right.
life events can have an impact on your credit. So,
Yeah.
certainly ask questions about hey, what should I do to try and improve my credit score if I
Mhm.
need to, and how does that credit score affect my mortgage? So
Yeah.
leaning into that credit question a little bit.
Yep.
The biggest questions I get are, hey, if I put in an application, is that gonna hurt my score because you're gonna run my credit? And
Yeah.
so I spend a lot of time helping people understand that the impact of an inquiry on the file is actually very small. And the most important things that you can do are pay your bills on time, credit card bills. If you have a
Yeah.
car payment, if you have another, maybe another shelter payment, your rent or anything like that, pay them on time. And then try and keep the next one is try and keep your credit utilization, in a manageable amount. So what I mean by that is, let's say that your credit card has a limit of 5,000, then maybe not carry it at 4,900 all the time. So if you can keep the balance lower, keep some available room on the card, those two things alone make up about 65% of your credit score. So paying bills on time and managing utilization can make a
Yeah.
huge difference. The impact of an inquiry is tiny. It's like 10%. And if you make multiple inquiries in the same 45 days, let's say you went to lender A and then maybe weren't happy with the result, and then you moved on and you called me or somebody like me, those two inquiries taken together represent one, sort of pull, one impact to your score. So it's
Yeah.
minor. Lenders know that people shop around. The credit bureaus know that people shop around. So ask the questions because it can help you to make the right decision and not worry about applying because you don't know if that's going to impact your credit score. So that's a great
Right.
question. That's a great question.
Yep. Yeah.
Was there anything else, Rob? I think that's the top five that we were going to go through.
Yeah. I can't really think of anything else off the top of my head.
Yeah. Okay. Well,
Other than
let's.
just kind of knowing the market, like, like people know that it's a busy market right now, and there are reasons why, but I mean, it's funny because I don't think anybody could have saw this coming. Like after
Yeah.
the pandemic and COVID, and it's just been a crazy market, right? It hasn't really been slowing down too much, but it's about asking the questions about what the market looks like now, right? And then it's about planning for now. It's not about planning for 2-3 months from now, and you can't go back in time, obviously, and we don't know what it's going to look like in 2 or 3 months from now. I mean, you can forecast, but nobody knows 100%. All you can do is just plan for now, ask the questions, and be prepared.
Right. Exactly. Exactly. Get a team around you. If you're a first time buyer, I think that our
Yep.
first advice was the best is get a team around you. It doesn't cost you anything to connect with a local mortgage broker where you are. And it doesn't cost anything to have a conversation with a realtor who might help you to get on the right path. So get your team
Yeah.
around you, ask a lot of questions, and, choose to work with somebody that that fits with your personality, that you feel that you can trust, and that answers your questions. And I think that's
Yep.
really gonna solve a lot of the potential problems. But if you have other questions, or if you wanted to reach out to ask Rob or I a specific question, Rob's a local realtor with EXP Realty based in Guelph, and I'm a local mortgage agent with Wealth Track based in Guelph also. I'll leave our information in the description below. And thanks again for this, everybody, and see you next time.
Thanks.